All right, Todd, take us through the numbers.
Thank you, everyone. Good morning. Today we are discussing the week ending today, May 18th. Let's take a look at what happened this past week. 46 days on average closed on market. Our month supply is at 2.29. Our absorption rate, 43.67. Where our average list price is up to 577. Our average sale price hovering about 362. Our average list price to sale price retention is at 98.44. So take a look at inventory. We planned this last week, Mike. We told everybody that it was going to go under 14,000, and it did. It dropped pretty good. It's down to 13,437. That was almost a 5% drop in inventory. Pending, look at that, up 11.3%. We're at 5,931. The market, the people in the marketplace right now, I don't have to tell you, if you're out with clients right now, or you are a client and you're in the marketplace, you're back. Everybody's back. It's they're now starting to realize that they need to start picking from that additional inventory that's out there. Closed units sitting at 3,218 for the month. There's a huge dichotomy there between the two numbers. The new listings this past week, we took 1,721 new listings. That was down 8%. You add the 8% plus you add the increase in the pending, and that's one of the reasons why we've lost so much inventory. Average days on market for active inventory is 147 days, and days on market for closed is 46. Taking a look at our price ranges, looking at what's happening under 500,000 right now, drop back down from 72%. So there's where your inventory shortage is still, of course, because it represents almost 70% of the entire inventory. But it went from 72% down to about 69. So we lost a significant amount of property, potential homes available for buyers under 500,000. Taking a look at the 500 to $1 million price range, again, that's been pretty steady at 20, about 101 days on market for that entire group there, as low as the 500 to 600 market being at 81 days. But then again, looking at your $800,000 to $900,000 market sitting at 118. So again, just that's how you can use these price ranges to kind of help you a little bit. If you're looking in a specific price range, you can see exactly a little better what is actually happening in that price range. Above $1 million, of course, and they do break this down in the MLS to a significantly greater breakdown. $1 million to $1.1 million, $1 million to $1.2 million. It's just too much to report. So we go over $1 million because it only represents about 10% of the market. So we do this and give you that glimpse. We're sitting at an average of 192 days for that product. So what's the story? Well, we added this gray box in the center of our spreadsheet, and the gray box represents last year, same week. And again, you have your Monday, May 18th, which is today for the last week. And then looking at May 11th shows you what we reported last week. So looking at that, we're down 8% week over week as far as new listings taken. We were at 2,200 last year. Basically being at 1721 is 22% off inventory-wise, new listings taken. Taking a look at how that affects the active inventory itself, we dropped from 14,089 to 13,400. Last year, we were hovering right about 17,500 properties on the market. So again, with the understanding that historically 70% of the market's under 500,000. Majority of those properties that we're not seeing up here is that 2,400 properties in the marketplace at that time. Looking at single family detached, we're now showing that in the red. We had 10,592. So of that 13,437 active properties, only 10,500 are single family, non-detached. That's down 5% week over week. So there was a huge hit on the market right there in that particular segment. New homes increased by 4 units, but there's 17 of that 10,500. There's 1,700, almost 1,800 properties available of that are new builds. So that does skew that number a little bit. Again, if we're just looking at, it's about 9,000 properties available for us to pick from with our consumers in the single family resale market. Taking a look at pending, this is probably the story of the day. We've jumped from 5,331 last week to 5,931. Just to, again, the importance of or the benefit of seeing that last year, same week. Look at 6,497 properties. We're almost back to that. Just this one jump of 10%, 11% week over week really is saying to everyone out there, or should be saying to everybody out there, hey, listen, we're less than 10% off right now. We're about 8.7% off of where we were last year. So this is a good sign, all the indicators. Now you're looking at this. This is the closed, taking a look at closed year month to date. We're sitting at 3,218 closed. Last year, the same period, we were sitting at 4,795. The 5,300 was the end of the month. So again, we sometimes relate to that, but we don't really look at it too strong until the end of the month. But 4,795 is where we were at last year. That represents, roughly about, 40%, 38% off. So we're still seeing right now these numbers, Mike. Closed units are showing us what took place last month. What did we put into contract last month? So between the pending showing us what's happening right now and the close showing us what happened 30, 45 days ago, we're probably going to finish May significantly under where we were last year. If we can get there, boy, that'd be wonderful. So we'll keep an eye on that and report that to everybody. A couple of other silver linings is that month supply is at 2.29. That's great. We've been in under 2 pretty much all year long. So all last year long as well. So when we're seeing that we're between 2 and 3, this is a real comfortable position for the entire market, because 3 months supply is really that sweet spot. So that's an actual good number right now. Taking a look at the pricing, we don't pay a lot of attention to the average list price, because that's just, more of a median perspective would be better. But the average sale price, this is telling us where's the, what's happening as far as the increases in the 70% of the market. And, this past week we were at 361, we were at 339. That was a 6% bump. But last year, same period, we were at 351. So looking at the entire total, we're about a 4%, 5% increase. Again, as long as we're under 10, we're not inflating the market. The sale prices are not over. And that's why I put that out there, because that under 10% is telling you that we're not in an inflationary period right now. And there's not a lot of pressure being placed on list prices because of that. But we say that, and we're down to the last couple of things here. We say that you were sitting at about 46 days on market. It slowed up about 7%. We're averaging about 50 days on market to 55. And so we are still a little brisk there. And again, that's more than likely because of COVID. But the list price to sale price retention, this is saying that the seller's not giving up as much. This is the second week in a row. Usually we bounce back into the 97, which is good. We're still sitting in 98.4. We were at 98.2. That increase, again, we just need to watch it. Last year, we were at 97.8. Slide your eyes all the way to the left if you can see the spreadsheet. 97.8 is the target that we always want to be at, because that is historically the perspective of the list price to sale price retention. So what does this mean when it's higher than that? It means that your sellers are not giving up as much money on the list price. So that's where it starts. And as long as it stays in there, we're okay. The moment that starts to hit closer to 100, that's when, Mike, we're sitting in a situation where, we would be starting to see the pressure being put on the prices. So that being said, the week looks good. More and more people in the marketplace, still a lot of property to see, and eager to see what Matt has to say, but I'm imagining that the rates are still pretty good. So it's a good time for a buyer and or a seller to jump into the marketplace. Different ways you can see us. As you just saw, we're available on a number of different things. Take a look at YouTube. Go to YouTube, West USA Realty, and you can see the entire presentation along with the slides. Mike, thanks.
I appreciate